Hi, my name is Terry Lynch. I'm the CEO of Power Nickel. Power Nickel is developing the advanced stage nickel sulfide project called Nisk. It's located in Namaska, Quebec. We're about to produce our inaugural 43101 sometime in sort of October, probably towards the end of October. And we expect to go to 8 to 10 million tons at that point of about 1.5% nickel EQ. That would make it a commercial deposit. So it's an exciting time to be looking at Power Nickel. Look forward to talking to you soon.
Well, before you talk to that, you can talk to me.
All right.
Hey, it's good to see you here, man.
Good to see you
for a while.
Yeah, since Quebec, I guess. We were freezing our butt off in Quebec.
It was a bit cold.
Yeah.
It's a bit cold. It's quite cold out there. Sunny day, really nice. Very, have you been here before?
Skiing. Never.
Nice.
Yeah, skiing is amazing here. The back bowls of Vale are legendary.
Yeah, nice.
Back when I was a young man.
Right. Now we're much older.
Yeah.
So we're going to talk about your project. We're going to have a little bit of noise of reconstructing the hotel. Apologies, folks. Is why are you here?
Again, we think we're dramatically misunderstood story, or perhaps even not even a known story. So when you feel that, you need to get your face out there and to the usual suspects and show them what you got and convince them with the data and go from there. So that's why this is one of the bigger conferences. It makes sense to come here.
Yeah, absolutely. And I know you're stacked with meetings. We were talking about it before we started rolling. You're here to see, is it a case of, awareness? Is it a case of I'm after some specific investors? Because you have recently, we'll talk about money in a second, or strategics, or it's just to say, like, as a high-grade nickel story, we're under-leveraged, we're undervalued, high-leverage story.
Yeah, there's a number of funds that come here that you can see cost effectively this way. That would be difficult to get to any other way. So that was probably our primary attraction to coming here. We'll see all the usual suspects on the strategic side. We've made some moves in that respect, as you know. So it's a matter of keeping everyone abreast of what we've done and how we're doing and how it's scaling.
Right. Okay. You've been going through the phases. Okay. I think one of the things that you can say, you've been on our show enough times, that you're hitting the grade question.
Yeah.
Right. 1.5. That's super good. Now you got to kind of deliver on the scale component.
Yep.
So tell us, I guess, where you're at today. You talk about 43101 coming up maybe end of October-ish.
Yep.
What have you been doing?
Sure. So we started off with 3.1 million tons of historical grade, 1.6%. We had updated it, internally to around 4 million tons with about 2,500 meters of drilling about 2 years ago. Then since then, we've drilled about 17,000 meters, hit on probably 55-60% of the holes, all with 1% nickel or better. Now that data is about to be incorporated into the 43101. So we'd expect it would, get to sort of the 8 to 10 million ton range, certainly 100,000 contained tons of nickel. And that, in our mind, would be enough to be a bona fide nickel mine, and it's commercial quantity. And that's just on one pod. Every nickel sulfide mine in the history of the world is multiple pod. So we'd expect this would be, we've already sort of identified some pods. We've already had some success with that. So we think this is going to be a big deposit. We think when we look at it and analogies in Canada for ultramafic deposits, which is what ours is, Lynn Lake was 22 million tons, Voisey Bay is plus 50. We'd think would be sort of in that 30 plus range. So that'll make it a very big nickel discovery. And, so that's what we're trying to get the word out on.
Right. Okay. And you've talked about, I think, saw some headlines and some articles talking about the kind of the drilling and the kind of the distance of the step out. So some degree of confidence in what you're doing.
We've done a lot of geophysics work, and we've used some interesting new technology and gotten some insights from that. So at our current, what we call Nisk main, we've noticed 3 trends that are going south and east at depth and on strike. So we're quite confident in stepping out on those. And we just did a 300-meter step out and hit 25 meters of massive sulfides, semi-massive sulfides. So it's exactly what you want to hit. Some big step outs, but, done with, what we thought was insight from our geophysics program. So we didn't feel like it was like a crazy risky thing to do. It was a progressive thing to do because we obviously want to add tonnage, and you got to be respectful of the capital. So we've got several more of those lined up because we really feel confident in what we see in the deposit and how we can rapidly add tons of resources.
Right. We're not saying big intercepts. Obviously, the grade's good, but not big intercepts at the moment. And there's shallow drilling relatively, isn't it? So with less than 300 meters. Is that about it?
Yeah. So that one would have been around 400.
400. Okay.
Yeah.
And
25 meters is a pretty good intersection for nickel. For high grade.
But even some of these ultramafics, we've kind of seen sort of longer, but much less grade, lower grades.
We're gonna make money.
Okay,
You know?
and I'm coming to that. Don't you worry, I'm a fan.
Lots and lots of money.
Okay, but-
0.25% nickel. God bless.
Right, but what I'm trying to get at is the way that small companies, so 30 million market cap company, right?
Yeah.
Okay, so raising money is expensive in relation to your market cap,
yeah.
right? So what I'm saying is, sometimes you just need to be smart about the
Yeah.
way that you do these things, right? So you're saying we're at 43,101, people can see we might be 8-10 million tons at these sorts of grades. That's economic, right?
Yeah.
We're good, and that's one part,
Yeah.
right? And it's kind of, if you can get there, you might get the valuation, you might get the uplift, people might get the leverage return on their investment. Do you feel that? So I don't want to put words in your mouth about
No.
that.
I mean, we have a presentation, a slide in our presentation where we compare ourselves with other high-grade
Yeah, I
nickel
saw it.
sulfide projects. And, if you look at Talamels, which, great deposit, very comparable deposit in many ways, it's valued at around the deposit for 400 million or so. And so now, I guess with their most recent one, they're up to 17 million tons, So, we think we're going to be half that anyway, and we're at 30. So the math doesn't work out. I'm not disparaging Talamels because they're down by 50%. I think it's a buy as well. Yeah. But I'm just saying, relatively speaking, once you get the number out there in a 43-101, there will be, in my view, a revaluation of us towards the 150, 200 million market cap, I believe, because that's where the math works out.
It is, but it's also quite kind of simplistic in the sense that you've kind of got to get the balance between all the different commodities, and you've kind of got the nickel and bits of copper, you've got some cobalt and so forth, and you've got the job of explaining to them how you get that stuff out of the ground to become an economic mine. Because if the market doesn't react, like it hasn't reacted for a lot of people for the last couple of years, it stays in the ground, right?
Right.
So how do you get around that? What are the other work? Because I like the thinking outside the box in terms of how you progress the story. Yep. But you may have to bring a strategic in. And you may have to on this one.
Well, in that respect, we have, right? I mean,
right.
we announced and have done a deal with CVMR Corporation, which is a very large nickel processor. Ultimately, $7.5 million, and they'll get between 5 to 7% of the equity.
Right.
And they'll produce a full feasibility study. So they're a private company, multi-billion-dollar private company. They obviously believe in the deposit, and they want access to Class 1 nickel in North America to advance their own business. And, I think that was a big, thing for us to have somebody from outside to endorse it and make the investment. And you couple that with the updated 43-101, and I think you got both ends of the
right. But what is it? It's a private company, so people don't know about them, and it's hard. But they don't have to say anything, so they don't. So what is it that you said that the problem you're solving for them, and what do they see in you?
Yeah. So what we're solving for them is access to Class 1 nickel in North America.
So how much they need, and what is it?
Yeah. So they basically they're big clients are the Department of Defense in the United States, Department of Energy, the battery sector, 3D printing. So they make they're sort of a world leader in powders, nanopowders, and wire and anodes, and they do things like, for example, the American $100 bill is printed on a nickel plate that these guys did. So you imagine the scrutiny you go to be able to handle that. They do the super colliders, so they have these $10 million nickel tubes made to 5/9 purity. They make that, so they're probably amongst, if not the most technical nickel producer in the world amongst them.
Right.
And so they need high grade nickel sulfide to do that. They want it to be in North America for obvious reasons, and there's not a lot of options there.
Right, but that describes a certain type of company. Like they're not looking for input into their stainless steel production.
They're
billions of dollars, right? This is very niche, specific, but high margin, I suspect, stuff where they want a source, presumably North American source, right?
That's one of the things that's attractive. They get between 2.5 to 3 times LME for their products.
Yeah.
So if the thing works out, what happens, the way we've entered the partnership at this point, or the investment, was they produce the feasibility study. That will give them comfort with the deposit. If it works out, it would probably cost about $400 million to build a fully finished product refinery where we would actually output the powders, wires, anodes, special projects. And that would get between 2.5 to 3 times LME price at virtually the same cost, maybe a little bit more, not much. So crazy high IRRs, So that would be, one of the reasons that's attractive to us. But from a in defensive perspective, what we also didn't do was we didn't lock up our future. We still
Right.
maintained our free agency. So we're still a free agent. We no offtake agreement, no first rights. So if at the end of the day, BHP or Wyloo or Glencore or Vale or somebody decides that, hey, they got to have this, it's available.
That's where I was going, because I think obviously a company like that has very specific needs, and we've seen it with titanium space as well.
Yeah.
And that's fine, but it doesn't sort of necessarily bode well for you guys in terms of telling that scale story again. So you've basically said that's not necessarily our entire future. We are open to other
we're open to it.
strategics.
I mean, they are building 2 multi-billion-dollar projects right now. So it's not like they don't have the capital to sort of step forward and build.
But they may not need it.
Well, they didn't invest $7 million for nothing, right?
Well, sometimes these companies do. They come in and they take option.
Well, we're gonna be doing a podcast with the CEO of CVMR, because that's one of the things we need to educate the world as to who they are and why they did this.
Right.
So he'll speak to the audience about that.
Fantastic.
Yeah.
So, but in terms of your future and the scale of the opportunity you see in front of you, you talk about this. This is just the first part.
Yeah.
You've got this ANT technology that you use to help you identify likely or prospective targets.
Yeah.
Right. So, why don't you tell us about that? Because I think most of the ones here will be thinking, I want to understand the scale of the opportunity.
Sure. So let's say we get to 8.5 to 10, fairly quickly by the end of October. So that's enough to be commercial. Then where do you go from there? Well, we think looks like we can probably grow, maybe another 30-40% on a Nisk main. So make it to 14 million tons. Who knows? And then it's like, okay, what other pods are there? So we know that we had a big hit on our airborne EM kilometer east, which we've now confirmed with the ambient noise technology. And there's 2 other pods that we've identified, with the airborne and the fleet technology to the west. And that's likely 3 locations that we'll be testing out that we think could well deliver pods like Nisk main. And as my VP of exploration said, what are the odds we got the best one first? Well, 3 or 4 to 1, right? So we certainly are quite optimistic about what that can do. And then the other thing that we would bring out is that we did step out and hit 8 meters of 1 ounce PGMs in our northwest. And that may be a completely separate animal, but we'll obviously be following up on that, because it wouldn't be bad to have a couple of million ounces of PGMs to help the economics.
Yeah, no, for sure. Once you kind of get to that point, I think in terms of market terms, in terms of share price driving that kind of growth story and narrative in the market, PGMs, it's a tough one. So, but nickel is exciting the market. Been lots of M&A activity. You mentioned the Wyloos of this world. So just sticking with your own, how do you move the $30 million company forward? Okay, one strategic in for $7.5 million. And so how does that break down, by the way?
It's basically done in multiple tranches and a stock price at the time. So we did the first one at 50 cents a share.
Right.
And then the next one will be in early November, and we expect, we're going to get our 43-101 out. Where at some point the stock price should respond, but we'll see. Right. And hopefully it's done higher and so forth.
So it's market incentivization for them, is it? Or is it about deliverables of things like 43-101s?
We structured it this way to try and minimize our dilution, right?
Yeah.
So we know that the math is $7.5 million to get the range of feasibility benchmark studies and all the things that we need to get done, so that the number is defined, and then it's a question of, well, how many shares does the number make? So that's what's defined by the market. So
is it effectively a drawdown, or is it against specific targets which you?
It's effectively a drawdown based upon the market.
Right. Yeah. Okay. So you're in control of that to some degree, because if the market improves. Well, hang on. Is there an optionality if you say, well, actually, we've taken some, but we don't want to take the rest of it?
You know,
the market goes crazy for
crazy up or crazy down?
Crazy up.
Well, crazy up means we'd issue less shares, so it's better for us.
But you'd still issue the shares because you want that as
what makes sense for us is that in 9 months, say by the end of Q1, early Q2, we're going to have a feasibility study. And the feasibility study, in my mind, is going to show huge numbers, huge IRR, because this is going to be enormously profitable, in my view, based upon what I know of these things. And that will be another market moment, right? So so that's why we want to get it done.
So you want to want resource, normal steps in the process. Okay. So quite frankly, the $7.5 million is going to get you to that point. So
exactly.
deliverables, which you think both should change people's perception of the value of this thing.
Yep.
Okay. You got to have a view on what's happening in the nickel market. What is happening in the nickel market?
I mean, obviously, it's soft right now. I mean, it's an economic, base metal. So if general economic conditions are slow, as they are at the moment, then you're going to be impacted. It looks to me like, China is, doing some things incentive-wise to try and get back on the game. So we'll see how it goes. But again, for our perspective, it's not so much what the nickel market is today, it's what the nickel market will be in 4 or 5 years. And by all reports, based on any sort of, intelligence service you would use, looks to me a dramatic nickel shortage at that time, based upon, what could, possibly come to market. So, we can make lots of money at nickel where it is right now. I mean, that's the good thing about the Nisk deposit, is in any economic cycle, we can make money and be mine. We don't have to have $15 nickel. It'd be great to have it, but it's a nice to have, not a must have. So I think if we're in between sort of, 8 to 15 for nickel, that's a great sweet spot for us. And I think that's highly likely to happen. And based on that, we can make a lot of money for our shareholders.
Yeah, essentially, Simon saying, so nickel's been bouncing around between 20,000, 22,000 for about the past 6 months, and staying still up 17% year on year. So it bodes well for the future, for sure. So things to look out for: 43,101 before the end of the year, maybe end of October, beginning of November. That's that sort of time frame. And how long before you would then go for a resource? What sort of time frame?
So there'll be resource in that 43,101.
Right. Okay. Oh, so I thought you meant there was an update, a second.
No, there'll be a feasibility study.
Feasibility
study. Yeah. That'll be end of Q1, early Q2. So that was the timeline.
Lots of good stuff coming up. Nickel on the up.
Nickel on the up. Drilling on the up. And then we're spinning out the nice kicker for our shareholders, our copper gold as well. So that'll be nice. So,
that's sugar. I didn't talk about that. Chile and Tell me all about it.
It was interesting with Chile, because one of the takeaways from working with the ambient noise technology is just how effective it is. And Chile, the big issue there is when you're exploring in the desert, which is where our projects are, where most of the the spots that are unseen.
Are you?
Yeah, we're on the Atacama, just beside Lundin's, Candelaria mine. So the caliche in the sand obstructs, IP and gravity. Okay, which is what you would normally use to, really assess out, where you're going to go for exploration. Doesn't impact the ambient noise. So because they're using it in West Australia, which has got caliche too.
Yeah.
So we're sending it down there after Nisk, and think that could be a game changer in Chile. Now it's going to be in the spin out vehicle, but Power Nickel owns 75% of it, and our shareholders will own the 25%, and then we're going to finance, raise the money separately, so it wouldn't do their thing. But we think it'll be a nice kicker for sure.
Yeah, interesting. And is there one more? Another asset? Yes.
The Golden Triangle. Yeah. So that'll be in it as well. And I mean, it's the only undrilled section there that overlooks it's literally the Mount Rainier overlooks Stewart. 3 half-ounce gold surface. It was going to be our flagship until I found Nisk. I really thought this was going to be a killer gold copper exploration play, but obviously we found Nisk and moved on. But I mean, it's a killer piece of ground for sure.
Happening when?
Basically in Q4. So we think probably get it wrapped up in Q4.
Mindful of whatever market conditions are, I suspect.
That's what we're always trying to sort of. I mean, the key is we need to be able to finance it independently. That's why we're doing this, so we can separate it from the purse strings of Power Nickel, so that we can give value to our shareholders, but not dilute it any further.
It's been an interesting 3 years watching you, actually, because it's been a tough market for everyone. Equities. I'm not giving too many people a hard time because the markets are tough across the board, but you've been sort of that kind of accretive growth, relentlessness.
Yeah, we're up like over 100% year over year, which is I should be 500%, but what the hell? It's 100%.
Take it.
Yeah. It's not minus 20 down. So it's it's a tough business, as you know, Matthew, and but at some points, you don't get all bad breaks. You do get some good ones, and I expect that's coming for us. So we just once and thankfully we're in Quebec, so we've been doing these 2-for-1 financing, so it hasn't been as dilutive as it could be. So we're doing a dilution at 50 cents a share instead of 25. Well, that's a lot more attractive. I mean, it'd be better at $1, but hey, you got to start somewhere. So that part's worked out well.
Okay, Terry, good seeing you.
Great seeing you.
Cheers. Best of luck this week.
Thanks,
man.
Okay, bye.